Good afternoon, good evening, everybody. Welcome to the Sunday market breakdown. Actually, to be honest, I don't need my headphones in, so I heard take them out because it's a bit weird. But yeah, thanks for joining me here. My name is James. For those of you that don't know me, I am a forex trader. I've been trading the markets now for the last 5 years. 3 years, maybe a bit more than 3 years profitably, and a couple of years where I struggled like many aspiring forex traders do. And so in these Sunday market breakdowns, I do just that. I break down the market for the upcoming week, but the main thing I do is I cover off the trades that I've done in the previous week, explain a little bit about how I trade, my approach to the markets, and why I got into each trade and how I manage them. So yeah, this is what I do here. I'm just going to wait a couple of minutes for people to join and get involved. Whilst I'm doing that, I'm going to do my usual. By the way, this is, I think, the 13th in a row in terms of Sunday market breakdowns that I have done. Been running the channel now for that amount of time, and the reason I do it is because I teach people my approach over here for free in LeveledFX. It's school.com/LeveledFX. I don't believe your route to trading education should be blocked by expensive courses. My approach, you can come and learn 100% for free. I do run a paid group as well, but the paid group is just where I spend my time doing daily calls with the guys in there. So that's why it's paid. Everybody can appreciate that time is valuable. It is the most valuable resource that we all have. And so therefore I believe that I should be at least paid for that. But to be honest, at this stage, it just sort of barely covers its own costs. But my goal isn't to make money from selling courses. My goal is just to create and develop traders. So I know that there's a lot of misinformation out there about what you actually need in order to be a successful trader. I have been profitable for long enough now to, well, I'm extremely confident in my own ability to trade the markets. I take profits from the market month on month. I am also a funded trader as well as having my own capital. I didn't start with no money. I'm not 16 years old living in my mum's spare room. I have had business success as well before I got into trading. But like everybody, I came at it very blinded, I would say, and with all the misinformation that's out there, I ended up losing a lot of money in the beginning. And just because I'd had success in business and other things leading up to that did not give me any advantage really in the markets. I think the only real thing it did give me is that I wasn't obsessed about making tons of money straight away, but I did still come in with a bit of an ego and got humbled by the markets, as the markets will do to you when you don't respect them. See, we've got Dima on the comments there. Nice to see you, man. And gonna have a go at pronouncing your name. Hola Nguyen. I would say it's a silent G, but good to have you guys on the call. Yeah, there's a few trades to get through today, but we've got we're 4 minutes in, so we're good. I'm just going to show you what I've actually got, because one of the things we did in the paid group this week is building confidence in a new trader is really difficult to do when people are coming into trading or finding me after having had losses and found that things don't work for them. It can lead to fear when taking trades and a lot of hesitation when you are looking to get involved in the markets. And one of the big things that I talk about a lot is separating planning from execution. And what I mean by that is that my typical day is I wake up, I get outside, I go for a walk for half an hour. It's the first thing I do every day to make sure that I'm in a good sleep cycle. I don't want to be trading the markets if I'm tired or not thinking clearly. So that's the first thing I do. Then what I do is I come to the charts and I plan my day. So what I'm doing is I'm plotting my levels that I'm looking at taking during this day. And I'll use a thing called average true range. It's an indicator on the charts. It's the only indicator that I use, and I just use it as a guideline as to how far price is likely to move in one day. I don't want to be plotting every single level that's on the chart, because the likelihood of it hitting today is low, so therefore I don't want to be tracking it. But what I say to myself is, if price gets to this point today, I'm probably going to take that level. So that's my planning bit done. When we get into the day, and I've got alerts going off on TradingView because I've set them where the levels are that I'd be interested in taking, that's when I turn off my brain and I focus purely on execution. And I think if more traders can do that, remove the hesitation, remove the fear from getting into the market, because they're used to getting in when you start out, you just jump into things, and it's teaching your brain the difference between just jumping into things and having a planned trade that you're jumping into because you're executing on something that you planned. It's really important to make that difference, because your brain doesn't know any better. So yeah, planning and execution need to be separated. Further down the line, when you want to bring in other things, like I'm also a big advocate of understanding market drivers. So the market moves as one. If you trade one pair, that's great, you can do that, but you need to look at the rest of the market, because there'll be something that's driving price. If it's not data, but even if it is data, most of the market is driven by the dollar, right? So dollar strength, dollar weakness, all the forex majors, pound dollar, euro dollar, Aussie dollar, New Zealand dollar, even like things like dollar CAD, dollar Swiss, these major pairs that have dollar in the currency pairing, they are all driven by the dollar's weak or strength. And so looking at the dollar index, which I'll get into in a sec, is crucial to understanding whether we've got a strong or a weak dollar. And then there's obviously like the individual fundamentals that happen, like on, for example, if you're trading the pound and we've got pound data coming out. I'm not afraid of trading news. I think news is good. It's what moves the market. Trading the news gets a bad rap because people associate trading the news with gambling and guessing on the direction of price after the data is released. Quite often, the data that gets released is like price will just do whatever it wants anyway. People talk about like the news being priced in. And what that means is that the market is expecting a certain outcome. And so throughout the week leading up to that data release, the market is slowly pricing it in, meaning price is already getting to that level. So let's say the pound has some news like we had this week. There was retail sales and an interest rate decision. I think it was this week. Interest rate, I'll have to double check that. But yeah, let's say it's retail sales and it comes in as bullish for the pound dollar. But the pound has been moving up all week already. It's because the market is already pricing in a bullish result from the data that gets released. So it's confusing to people because the data gets released and then the pound drops and you're like, what? I thought this was a positive. This should be positive for the pound. And it has been, but it's been priced in. And so then you can fall back onto your levels and know that the levels will work. So price will literally come up to the level and then sell off from it because all week it's being priced in. So you get a quick spike up and then price will move away. Same thing in all data releases that happen. Some drive bigger moves than others, like you have non-farm payroll, which we're going to have coming up pretty soon because it's the first Friday of every month. Traders are afraid to trade it for the reason of that they're being told don't trade news. Like I work off pending orders most of the time, and so I don't feel like I'm actively trading the news. What happens is I get into a trade because of the data has pushed price into a level that I've been anticipating and waiting on during that day, and then once price actually hits that, it aggressively moves back in the opposite direction. Whereas when we don't have data in a day, like a subdued market, so price is just kind of moving very slowly between the levels, I'm not going to expect a big move into the level and then a big move away from it. Price is just going to kind of do whatever it's going to do. And knowing those two different market conditions is really important for you as a trader in your development, because this is why so many other strategies, when you mechanically execute on them with no consideration to the market conditions, you're going to get smashed. Because you don't understand things have changed. So going back to it, you need to understand that the whole market always moves as one. But anyway, I digress. I started off by saying there is a lot more trades in my trade history this week. purely because we were doing an exercise in the paid group in Leveled FX. The free version, by the way, if you're just joining, is school.com/leveledfx. Totally free to learn how I do what I do. If you want more help, there is the paid group, but that is entirely on you if you want to do that. But yeah, we did this exercise where I want to build people's confidence in the market. And so the best way to do that is to plan your levels each day and then take the levels as they get hit. And you can do that with 0.01 lots, or you can risk a bit more if you want to, but I don't suggest doing that, because if you do that, you're going to open yourself up to feeling very emotional, and that's not a good state to be learning in. So the best way, I think, is to place meaningless trades. Do it for a week where you just plot every single level, and if it goes well and you're feeling confident, great, you've achieved what I wanted you to achieve, and now you can start to increase your lot sizes going into the next week. But the idea is plan and then execute. Don't do the same thing at once. If you're coming to the charts because an alert's gone off and now you find yourself thinking, oh, is this still a good setup? Like maybe this isn't the level, maybe it's the next one, and you start to second guess yourself and hesitate, and then you've missed it, and then you just watch the level work. That's not what I want for you. Okay, enough talking. Let's get into the trades, because there's a few to get through. So on this, I'll use the first one just to kind of walk through how I trade, so that it's clear for anybody who is new to me, my approach, and levels-based trading. So first trade on the list, I think, was pound dollar. It was. I actually did a post just here in the group, literally before I hopped on this call. I actually posted all of the screenshots as well from the actual account that I took these trades on. It's not something I usually do. The reason I don't do that is because I think it encourages the wrong thing. People get into trading to make quick money, to get rich quick. That's just not the case. You're not going to do that. If you approach trading with that approach, I think that's disrespectful to the markets. And if you disrespect the market, it is going to piss all over you. And yeah, you're just going to lose your shirt and never make any progress in the markets doing it that way. So going into it, pound dollar. Yeah, and these are all the trades, as you can see, match my what I'm doing here. So first one, pound dollar short on the 16th. So this was, let's go to pound dollar. All right. And was this the level that I want to talk about? 33093. No, that was 3222. There's another trade on here that maybe I haven't marked up. Sorry guys, just bear with me a sec, because I want to give credit where credit's due here. There's a 1.3309 trade that I did. I may have cleared it off my charts already. Is this one. All right, so we'll come to that. So the 3209. 3209. 32. You'd think I'd be better at this, but I'm just not. 3209. It was this one here. So basically, first trade here, and I can use this to explain how I trade as well, right? So what are we looking at? This is what I call a level. Why is that a level? Because price has moved off of it in a very big way, and I really like the candle body closes. Candle body closes, I think, is the best way to decide what the level price is. Most people want to put their levels on a wick. The wick is not the level. It's just something that price tapped into. Most of the data, as you can see here, look at this, 4-hour level, another 4-hour level. And then here you can see that price has come into it and then come down and made its move within that. So why I like using these is because I've just seen time and time again that this is what price tends to work off most of the time. You do invite a bit more drawdown being how much a trade goes against you before going into profit. This level, you have to anticipate this wick. So what I first do is measure the wick. My measuring tool will work. So I can see we've got a 28 pip wick on this. So when price comes into this level and goes against me like this, so price is coming into the level and then it's gone against me by 18 pips. I'm cool. because I know that I have the potential of 28 pips of drawdown anyway, potentially more. Like the wick isn't just like, oh, every single level is going to give me whatever the wick is in drawdown. That's not how it works. But I know that that's very likely based on not the research, but what I've seen the market do over and over again. And that's why I also advocate tracking and journaling, so that you see this stuff over and over again. The best way to become a good trader is to just do more trading. And that also gets a bad rap because people confuse trading with over trading. Over trading is when you're just mindlessly getting into the market because you've got FOMO, or I don't know. I honestly, I don't really understand it fully, because if your goal is to make money with trading, you can't just roll up to the charts and think that this looks like a good area to get in, having no knowledge and no experience, and then just getting in the markets. But that is what people do. I know that's what happens. I understand why people might want to just mess about with it. That's cool. But like, if you're seriously trying to get ahead as a trader and like make this something that you can make money from, like you just can't treat it that way. So that's how I identify a level. Ideally, I want a strong move into the level. Now, the strong move here that we saw, this probably reacted off of a level within the wick, but it hasn't for some reason. Maybe it's even a 15-minute. So what I'm doing here is I'm dropping down the time frames to see if there's a level on the lower time frame within the wick. So if you see that you've got a wick that's 28 pips and you're uncomfortable with a 28 pip drawdown, you can look to refine that level. So what I'll do is I'm now on the 15-minute chart, and I'll come in here and I'll just change the color of this level. See, I've refined it to the 15-minute candle body. So I'll make it yellow, and then we'll come over here and we'll see where price actually reacted when it came into my initial level that I had here, right? So price actually went up to the, let's just zoom out again so you can see what I'm talking about. So this is the level here. Let's make that a different color so you can differentiate it from the other things on my chart. Let's make that one pink. Right, so price came up. This isn't the nicest move into the level, to be fair. And so it's kind of like just one of those trades where it's less probable, because what I'm looking for is a strong move into the level. Now, if you go up the time frames, moves can look strong because essentially the move has been from here, right? And so if I was to measure that without making loads of arrows all over my chart, that move in is 87 pips. So can I expect a 27, 30 pip pullback from that? Probably, yes. And, you know, I think of it in percentages. If price has only moved 50 pips into it, or let's say 30 pips into a level, can I really expect to get 20 pips on the pullback? Because again, I'm waiting for price to move into my level, and then I'm riding the pullback down, right? And if it's the other way around, it's the other way around. I'm looking to buy and go long. But if we've got a big strong move up, then I'm looking to get short. I love fading the strong moves. Fading just meaning that I take the opposite direction. Whilst other people will fear it because they're like, oh my God, price is going up. Let's get into a buy and ride the momentum or the trend or whatever they've decided they're doing. I try to do the opposite because most people lose money in the markets, right? So if I'm doing the opposite, I feel good about myself, and I know that I'm probably going to get what I want out of the market. So anyway, price moved in. A little bit of messing around here, but we did hit Asia session, and so we just had to let price do whatever it's going to do there, and then we had the pullback. But look, it's actually reacted from the 15-minute refinement. I don't care because I've seen enough times where it doesn't hit the 15-minute refinement, but I will make a note of that, and if I start to see it more and more again, I might decide that I'm going to change my approach or start building that in. If I see a longer wick and I go to the hourly and it's still kind of like the same area, then I'll look to start refining more there. But yeah, there's always stuff that I can improve in my own trading, and that's why journaling or tracking what you're doing and then reviewing what happened afterwards is so important. So I just want to go and get rid of those yellow and red lines now. So that was my original 4 hour, and I'll just go ahead and move that one there. Hey guys, I see that you're posting comments and joining. If you've got questions along the way, drop them here and I'll go back over them afterwards. But I've got quite a few trades to get through today. So I'm going to go quite quick. Hopefully that doesn't devalue the message or how I usually spend a lot of time talking about each trade. But the idea is just going to be level, hit, pullback, first area of potential struggle. And we'll get into that on one of the trades I've actually got here on the chart. So that was the first trade of the week. Euro dollar short from 1.1178. Let me show you this one. So same kind of thing. Here, this big long wicky spike you see here, that is the Fed's interest rate decision. So they decided to cut interest rates more than consensus. I think consensus was 5.25. Current interest rates were 5.5. So they were going to cut the interest rates by 25 base points. They didn't. They cut it by 50, which is generally bad for the dollar because interest rates are what currency markets are driven on. Everything relates to interest rates. Doesn't matter what the data is, everything eventually gets to it. If it's CPI, you're talking about inflation. If inflation is coming down, then banks are going to start lowering their interest rates. So inflation coming down is great for consumers, right? Because it means that things are kind of going back to normal and the economy is growing and blah, blah, blah. That's the narrative. But when that happens, it means interest rates come down. And if the interest rates get lower for a given currency, what do investors do? Well, they move their money out of that currency into somewhere where the interest rate is higher because they're investors and they're looking to get a return on their money. So you have to understand that's why the currency markets move, and that's why pretty much all data leads to that. So, you know, even if it's GDP, again, it's kind of like economic based. So if the economy is recovering, interest rates are probably going to be coming down. So the market starts anticipating that there's going to be an interest rate cut. But again, it kind of gets priced in. As you can see here, like euro dollar has just been coming up. No, the market knowing that the Fed's interest rate decision was going to be at this time. And so what did price do? It actually went up, whereas the dollar, it should have actually, well, continued up. Yeah, but basically just a long spike, took this out and then went back in the opposite direction. Because that happened, I often ignore those big wicky spikes. And price moved quite far for the euro dollar in terms of a day. We moved 109 pips in the opposite direction. Then we came all the way back up to here. And so there was a level within this. I think it was the 15-minute refinement, if I'm not mistaken. Or it was taken from, no, tell a lie. So it's 4-hour candle body close over here. And basically just discounted this wick that's in the way. And so what price will often come back to do is once it's moved away, it will come back, retest the level, and then move off. And that was it. So strong move in and then off the level. And then what I've done here is I've taken my profits at where I think price was going to struggle the first. So over here, we've got, let me use my arrow to point at things for you. Over here, we've got a 4-hour candle body close, which could be considered a level. So level to level would be reasonable for price to start struggling around this area. It didn't. It did. We did have a bounce from where I thought we would. So there's also this wick to consider here. This wick was too close for me to consider. That was a strong move in. So price was going to move past it. You can see if you actually look at how price moved. So price moved in and then it came down to here, which was this wick, the top of it, right? This is what I usually use to define areas of potential struggle. And then what did price do? It went all the way back almost to entry, which is why you never move your stop loss to break even because, yeah, that's for another video, but don't do that. That's stupid. So price came all the way back, so it did react off this wick, but I'm obviously expecting more from this move because we've had a strong move in. So again, basing it on percentages, can I expect a pullback to at least this second wick? Yes, I can. And we've also got this kind of level that's formed there on the candle body close on the 1-hour time frame. So that's where I decided to take my profits on that. And I think it was around, yeah, I think it was 20, I can't remember. 25, 26 pips. I posted it in the community. It's free to join. You can go and check it out if you want. Leveled FX, school.com/leveledfx if you want to go and see that. But yeah, that was the euro dollar trade. Right, moving forward. Pound dollar short, 13309. This one, I want to call out one of the members. He's going to, I don't think he's on the live. At least I haven't seen a comment from him yet. I don't think. No. It's probably working. But I got to shout out a member on this one, because one of the things that I don't do enough of is check the weekly levels. And this was a trade that he actually didn't end up taking, but he called it. And I thought, yeah, that's a clever trade. And yeah, he said that his reason for not taking it was that he wasn't feeling too good that day and just wasn't feeling it, and so therefore didn't get involved. But I did. And so I then showed him that afterwards, because what am I trying to do with the community is build people's confidence. So the fact that he planned the trade but didn't execute on it was odd to me. But anyway, he decided he didn't want to get involved, and that's absolutely fine. Like, busy with work, whatever. So this was, let me just double check. That is 3309, 3309. Yeah, this is this level here. So what I'm doing is I'm going back and I'm like, where the hell is he getting this level from? Like, I'm going back and I'm like, back. Maybe it's a 4-hour level. Is it going to let me go back that far? It should do, because I checked it earlier. Almost there. If there's a better way of doing this, let me know. Technicals is not my strong point, especially with TradingView, but I get by. My God, please help me get there faster. There we go. I'm here. Right. So that isn't really a level for me. So I'm like, nah, that's not it. That's, I'm not sure what he's trying to do there. So then I hopped up to the daily and I'm like, okay, maybe it's a daily level. So I'm hopping up here. I'm like, well, it's definitely not a daily level because it's right in the bloody middle of a candle. So it's not that. So then I'm like, all right, he must have sniped a weekly level. And I'm looking and I'm like, boom, weekly candle body close. So what happened here is price had been coming down and up, down and up, down and up. And off one of the swings up, this was the candle body close, not the wick, the candle body, right? It's this level right here. If we go over, probably won't be able to see it now because it's on my, where is it? It's on my chart. But yeah, this is the, let me just drop down again. So that's what it ended up being. And so what I did is I got in at the level. And as you can see, price just boom, smacked into it and then pulled all the way back. Why was my first area of potential struggle here? Well, it was because we got the wick just here. So price is obviously going to struggle when we come into this. And we did see that it did. It bounced here and then moved up 7 or 8 pips, but then continued on. Sometimes I leave a running position. On this occasion, I did not. Sorry, this one over here. Yeah, price came down, bounced up, and then pushed down even further. But, you know, I didn't leave a running position on this one. Sometimes I just cash my full profits, especially on the funded accounts. Personal account, I usually will leave a runner. But usually, if we're at a point where price is like an all-time high or some key level, like on the weekly, like if there's a huge, like if we were to get up here, for example, I'm going to leave a running position on my pound-dollar trade. Because we are at a significant point, or even if we were to get up here where I'm sort of anticipating this trend moving up and then we got this nice big weekly level. If we get here, like I can place my pending order here right now. There's going to be a trade there. Like that's going to happen. Okay. Not financial advice, but anyway, so that was that pound-dollar trade. Then we got gold. So actually, yeah, I didn't shout you out. That was Mike, by the way. So Mike, when you watch this back, because I know you will, that was a great trade. You should have been in it, my man. Like that was all yours. So I'm seeing the comments as well. Yuji, I see it's your birthday. Shout out Yuji, happy birthday, young man. He's been doing phenomenally well in the paid group. Profits every week, consistently showing up to every daily call, tracking his trades, planning, removing his brain when executing, and then coming back and reviewing every single week. I know this because he sends it to me in a DM. I tell him every week, just post it in the bloody community so other people can learn from you. But yeah, he's getting better at doing that. But anyway, happy birthday, man. So yeah, shout out Mike. That was a great trade. You should have been on it. I made money. You didn't. But let that be a lesson. Take the level. The level works, man. Right, gold, dollar. Trade on gold. Forgetting what I'm doing. Okay, so yeah, go to gold. This was pretty mega. So this trade, I did leave a running position because it's gold, and I know it's going to run past my initial take profit. See all the birthday love coming in for Yuji in the comments now. That's cool. So this one was pretty much the same kind of thing as what happened with euro dollar. This spike over here, I'm now on the hourly chart. Tell you what I'll do, I'll put my watermark back on. I take it off because it annoys me, but I know that when I'm doing videos, it's much easier for you guys to follow what I'm doing when I've got the watermark on. So yeah, euro dollar, if you remember, also spiked up for the Fed interest rate decision and then massively just pinned it, moved away. The move on this was 500 pips. I mean, it was ridiculous. I should have planned this one better, to be honest, because it was quite an obvious psychological level. There was no technical up there for me to get involved. This wasn't a level that had ever been formed because it was an all-time high at the time on gold, but we'd already hit 2,500. So psychological level, we'd taken that out. It was just obvious that the Fed interest rate decision was going to push us to 2,600. That would have been worth the risk for me, especially with a 500 pip move on gold. But I didn't have my brain in gear at that particular point and therefore missed out on that. But I did have a trade that came back over the next, I think the next day. I think it was the next day, yeah. So price recovered the full move and came back up into here. And where I was getting confused with euro dollar and the 15-minute chart is because I'd seen that on the gold. So gold is just coming, and there's not really a level within that wick, right? So once again, I'm not going to get involved at this level here. And you can see price did not react from this level. This on the 1 hour chart. Usually I don't touch anything lower than the 4 hour because I am a day trader, but at the same time I use almost like swing levels to get involved. But yeah, it's kind of like a hybrid of swing and day trading, I suppose, just taking the levels. So there was nothing within this wick to go off. There was this kind of over here, which would have been a similar thing to euro dollar in terms of like the 4 hour level, then discounting the wick because it was just a data spike. But I actually refined this to the 15-minute. That was my entry. Absolutely pinned it perfectly. And then why did I get out here initially? Because that's where price had last hovered before the push into the level. And so therefore my rule is I have to take something off the table once the first area of potential struggle is hit. It could hit here and then do that, right? And then I'm just left with nothing, which is stupid. I've got the data over time. So I know and understand that if I'm not taking my profits here and waiting for a bigger move every time, like, oh, James, you only take this amount off the table each time. Yeah, well, I'm consistently profitable from doing so. And I go back over my trades and review them. And if I do this across all the trades I've taken, and if I don't take profits at the first area of potential struggle, I know that my stats look crap, right? So I'm not going to do that. Also, amazing for your psychology. If you haven't got to wait so long for your profit target to hit, awesome. Like, risk reward is the big pushback I get on that. Don't care. Like, I think you should consider risk reward if you're a really bad trader and you have a very low hit rate. But when you trade levels, the hit rate's high. So you can afford to take a loss every now and again that is a negative risk reward. I'd much rather just come in, take the level, pick up the money and move on to the next one. Rather than sitting in trades for a long time, waiting for a 1 to 5 or 1 to 3 or whatever it is your strategy is. Not bashing any of the strategies that do that at all, each to their own. I'm just explaining how I think this works for me. It helps with my psychology when I'm getting into trades, and I'm never really in a trade for longer than a few hours. So yeah, it's working well for me. So anyway, first area of potential struggle, boom, hit it. Left the runner. I think I cashed 50% only at this point, which is a lot less than I usually do. I usually cash 80 to 90% of the trade. But because gold had such momentum behind this candle, I kept going and set a second area of potential struggle using CTrader. CTrader has a function called advanced take profit. The only annoying thing about it is that it does have to be running. The machine you're using to trade does have to be running. And so I actually use a virtual server for that so that it's always on. Otherwise, I know people that have set advanced take profits in CTrader, and then they've closed their computer and then they've come back and they've seen price hit their exit. but didn't take them out. So you got to be careful on that. Yuji says, my account is my stop loss. I don't even have to set it. Yeah, well, yeah. So if you have a small account, you can trade higher risk. It's all dependent on, I'm going to waste time getting into that now, man. Yeah, just quickly on that. Risk management, people say 1% is the gold standard. If you're trading funded accounts, yeah, why not? Start with that. But it's entirely on the individual and what a lot of money is to you. If you're trading a personal account and it's 500 euros, and to you 500 euros is your rent, then you definitely you should not be taking 20% risks on a trade. That's be ridiculous. But if 500 euros to you is dinner with friends, then sure, take the trade, 20%, whatever. You've got more money and you're comfortable with that risk. But just know that you might end up screwing with your mindset if you're taking loss after loss by going in too heavy. So mindset first, capital second, profits third, always in that order. Haven't beat my drum about that for a while. So yeah, psychology first, capital second, protection, that is capital protection, and profits always come last. Right, that was a gold trade. At the same time, I had a silver trade. Let's see if that one's next. Yes, it is. Silver from 31.29. Let's have a look at this. I also split this one. So partialed out. Why did I get involved in this one? Can anybody tell me? There's too much of a delay on YouTube and I have too little time. But yes, it was the 4-hour candle body close from over here. So 4-hour candle body close. We put average true range on the chart as well. So this is the indicator that I use to determine how far price moves in a day. It is not the gospel, right? Price can overextend average true range and just keep going. So don't treat it like it is absolutely certain that price cannot go further than average true range. It is the average that price has moved in a given day over the last 20 days on a given currency pair or instrument in general. You can put this on anything like the US 500. See, it does the same thing, right? Silver. So yeah, price was overextended, which is something I also look for. If you want more clarity on that, free course is school.com/leveledfx. Everything I do in there, I teach for free. You can go and access that. Like, there's nothing, no special surprises. Literally, if you want to get more help from me, I charge you for that because I've got to spend the time helping you, right? But the course, I can do that once and you guys can go and watch it whenever you can. And it's a community. So there's a bunch of guys in there who are in the paid community who've been doing this a bit longer, and they're just jumping back into the free and helping people out. It's awesome. So anyway, back to silver, 4-hour candle body close, price overextended. And yeah, we consolidated there a little bit, but we pushed up and then we got the pullback to where I wanted it. I don't like using that terminology, where I wanted it. So forget I said that. What I really mean by that is where I think price is most likely to struggle. Now, there was a couple of things on this silver trade. We had this wick here on the 15-minute. But again, I was expecting price to break this. I was also carefully watching gold because usually gold and silver do correlate. And if gold wants to get a move on, then so does silver. And you can see once gold actually gapped and really got a move on for the rest of the day, silver also gapped down and then hit my first area of potential struggle, had a bit of an exchange here, and then we continued down. So I took my first profits. Again, it was the C Trader advanced take profits that whipped me out of the market there. I'm not scrabbling around trying to like think and like, am I getting out here? Maybe I'll wait. Maybe price will come back on me. I'm not doing that. I've already set my advanced take profits. I know ahead of time, well, let's say I know from the moment that I've got into the trade, whether or not I'm going to take this to this level or to this level. And if this is the first area of potential struggle, that's when I'm taking profits off the table regardless. I'm not leaving anything on. I'm not leaving everything on for price to just do what it wants from there, right? So that was the silver trade. First area of potential struggle, second area of potential struggle. I think it's more clear on the 1 hour maybe for the second area. Well, the second area is basically these candle body closes and these wicks over here. So that's why silver was done that way. Hopefully that makes sense. If you do have any questions about what I'm talking about, this is the same YouTube live every week pretty much. The trades are different, but the approach is the same. I say the same things. Maybe there's some nuggets in between, but if you are new and you don't know some of the stuff, you can do two things. You can ask a comment. You can make a comment asking a question, and then I can answer it at the end. Or you can go back and watch all the content that I did over the last 12 previous episodes of this Sunday market breakdown. Or even better, you can go join Leveled FX, which is school.com/leveledfx, where I teach all of this stuff for free. And there's a great community in there of people that are cool and want to help you guys out, because I help them out and they're now seeing results. So they want to pay it forward too, which is the best possible outcome I could expect from that group. Right, Aussie CAD. We are getting through it. This is good. Aussie CAD was a little bit ugly, as it often is, to be fair. But again, decent move in. So the move in was, let's get off the hourly into the 4 hour. Let's look at what I'm looking at. 4 hour candle body close back here from the 16th of July, 2024. And over here, that is my entry, as you can see. So price has moved in, a little bit of drawdown, 17 pips, whatever, like it's fine. If you can't handle drawdown, I don't know what my answer is to that. Drawdown is part of trading. My confidence in the levels and for them playing out is so strong that drawdown doesn't do anything for me anymore. Because unless something's happened that has invalidated my trading idea, the trade will get to the first area of potential struggle. And if it doesn't, it's because something has changed in the market. There is a new driver, in which case I will learn something afterwards, because it's either something that I didn't spot or it's something that I will spot afterwards, make a note of, and make sure I check for next time on the given currency pair. So that was Aussie CAD. Reason for entering, first area of potential struggle is, if I drop down the time frames, basically the move before. I did actually have a bigger target first. My first area of potential struggle, I thought we'd get down to here, but then I revised it because of these wicks over here, and also that this was the last push in to the level that we had from this region. So I think from here, just if I was to take profits here, I'd literally be like 11 pips. But we'd had a decent move in. The move in was 60 pips. So I was expecting a bit more of a pullback. There were other things going on as well, like the positioning of Aussie dollar. Aussie dollar was looking to pull back as well. So there are other things that I can bring into this stuff. I don't want to overcomplicate my approach though, because largely it is literally just strong move into the level, take the level, take your first profits at the first area of potential struggle, and that's it. Also price being overextended. So I think price with Aussie CAD, you can see, was overextended. Price actually started up pretty close on my day for that. We see 6 a.m. my time. We were almost at average true range, which is sometimes a bit skewed for Aussie and New Zealand pairs because of the time difference. But nevertheless, the level did work, and that's it. Like, that's all I can expect from that. So that was Aussie CAD. Pound yen loss. This one was stupid, right? And I'm not just saying that because it was a loss. It was just an error on my part. So this is the level. You can see what's happened here, right? Taken from over here, 4 hour candle body close, bit of a interaction here. Pound yen always looks a bit more skewed because like that, which is like, looks like nothing, but it's almost 100 pips, just that range there, because it is a volatile pair. We had a nice strong move in from this wick down here, boom. So it was an almost a 250 pip move in. As you can see, price was overextended and just missed my entry here. And one of the things we were doing this week is taking every level. So I decided that despite this not reaching my my level and pulling back quite significantly, 170 pips or so, I left the pending order on. and it got absolutely annihilated the next day, as you can see, with this rather erect candle smashing through my my entry on pound yen. But you know what, guys? Who cares, right? Like, mistakes happen, and when you review your trades, and people in the group can back me on this, when you have losers and in the moment it's kind of emotional, like this, by no means was this an emotional trade for me, but I know that the things that people go through, they question their ability to ever be able to trade because of a bad trade that happened to them. Like, price went against them and they did something stupid, and that's it. Then they don't want to look at it again. The best thing you can do is go and stare at that loser, that losing trade, and really break down what was happening across the rest of the market. So for me, like, let's say I was a little bit upset about this pound yen trade. I wasn't, everything was fine. But let's say I was a new trader and I'm like, oh man, I don't understand. James said, like, just wait for the level to get hit. It didn't get hit, so I left it on. I'm questioning whether I can do this stuff. What's going on? The first thing I would do is I would go and look at pound dollar. I would look at pound dollar and see if there was any significant pound strength across the market at that time. If there is, I would then look for a reason why that happened. All right, that's the first thing I'd do. Second thing I'd do, this is a yen pair, and the yen pairs often correlate together. So I'd have to go and look at what was happening with euro yen, what was happening with Aussie yen, what was happening with New Zealand yen, and what was happening with the dollar yen, and what was happening with Swiss yen. I always leave Swiss yen out. We don't have the best relationship, but we did have a winning trade this week on Swiss yen, so I'm bringing it back. So I'd go and look at what happened across the market at that time. If all those other pairs were also incredibly bullish and there was a big move, then maybe there's something I could learn from that. The next thing I would do is I'd go and look at the Japanese stock market. So the Japanese stock market is otherwise known as the Nikkei, the Nikkei. I'm not really sure. I need somebody Japanese on the live stream to correct me and tell me, is it the Nikkei or the Nikkei or something totally different? Probably just ballsing it up the whole time, but I'm going with the Nikkei. So I look at the Nikkei because it is the Japanese stock market. It works, the correlation works the same way as the US 500, the US 30 works and correlates with the dollar's weakness and strength. So I'll say it again for everybody. If the Japanese stock market is selling off, so people are selling their stocks in the Japanese stock market, they are receiving yen in return, right? So they're moving out of what would be considered risky assets, which is companies that they're investing in, and they're moving their money somewhere else. So it will go into yen and then maybe into some metals or into some, I don't know, something else that's considered a safe haven, right? So in that process, the yen has to strengthen. So when the yen strengthens, so Japanese stock market coming down, pound yen will also come down. Japanese stock market goes up. What are people doing? They're taking their yen and they're reducing it and putting it into the stock market. So people are rejecting the yen and saying, give us stocks. Since we don't want yen, we want stocks, right? So when that happens, it creates an imbalance in the market, and therefore the yen weakens. And if the yen weakens, what does pound yen do? Pound strengthens against the weak yen. So that's why I would check all of those things. And that's where I would get my lesson, right? On this occasion, I believe it was the fact that all yen pairs, well, it was a couple of things. The move already happened. It just moved and happened before my level, right? So my level wasn't the best. What I should do is I should go back over here and be like, okay, well, clearly I've missed something with the level. I've just blindly gone in and gone, okay, I'm just taking the 4-hour level, and it hasn't worked out. So I would drop down the time frames or come back over here and be like, okay, so let's look. So price actually moved off this. So now I can visualize that and just kind of take a screenshot, put it in my journal and be like, look, that's where price moved from. Can I be right about that every time? No, I cannot, right? Does that happen every time? No, it doesn't. But if it happens enough, right, then I will look to maybe adapting what I do. But again, I did everything right leading up to this. I was unemotional. I planned my trade. I executed it blindly without even removing it after seeing a 175 pip move off what was almost the level. Like, it came within 10 pips of my level. But anyway, that was the pound yen loser. So hopefully everybody can look at that, laugh at me and see, no, but they can look at that and just know that that's absolutely fine. And you don't need to beat yourself up about losses like that. That was a particularly stupid one for me, but I'll allow it on this occasion. Yeah. So anyway, that was that one. Pound dollar. We go back there. I think we already covered it, but we may have not. So this was this up here. I believe this was I want to say 4-hour candle body close. Come on, man. Help me get there. There it is. There it is. Yeah. 4-hour candle body close from 4th of March, 2022. Decent level, right? The longer price is away, the better the level will work. The longer price is away, the better the level will work. So if we just came down now and up again, not the strongest level. This guy, decent level. We've got a lot of gap in between. What's going on here? You can actually see, I'm not sure if price actually hit the level directly. It didn't. It tagged me in. And the reason it tagged me in is because I always enter my trades 2 or 3 pips before the level. And the reason I do that is typically because of spread. I think this one may have missed me on my personal account, but on the funded accounts, this one tagged me in. And so, yeah, reason for this, 4-hour candle body close. And why I took profits at this area? Well, because that's where I expected price to struggle first. Why did I expect price to struggle there? That's why we got a wick over here. And yeah, price did actually break down a bit lower than that. So not the best exit on that, but at the same time, profit is profit. This is also something that you can review, right? Like how many of your trades are you taking profits too early? And then you can look back and see like, okay, maybe I can do something about this. But when you're new to trading, I definitely wouldn't rush into going, maybe I can start adjusting my take profits now because, you know, I'm taking profits real early and I see price runs a lot. Like that's cool and everything. To pass a funded challenge and to get yourself funded as a trader, you do not need to run all of your trades to the longest amount of profit. You can just take everything at what I consider the first area of potential struggle. So do that to get funded and then you can mess about with stuff later. But, you know, the messing about has to be data driven. It has to be from screenshots, trades that you've taken and things that you've identified where you're like, I could do better there. I've noticed that the Swiss pairs don't always react off a wick or struggle where price, they come back into a wick. They'll quite often just slowly creep past them and work off the candle body closes. Like if this was Euro Swiss, for example, I would expect price to struggle around here. I can see that the pound dollar has struggled kind of just before that. This last push up here, that would have been a better first area of potential struggle. And I could have almost doubled the amount that I took from that trade. Am I sad about that? No. Profit's profit, you know? So am I the best trader in the world? 100% no. But can I help you with your own trading and develop as a trader? Yes, I can, because that is what I do with myself. That's what I'm continuing to do with myself. And I think once you master the basics and you get a lot of the misinformation out of your head and unlearn a lot of things, like the over complexities that people push upon people, the complex strategies and things, you know, using moving averages, exponential moving averages and liquidity. I don't even know half that stuff, all right? And I take profits from the market. So if I don't know that stuff, you don't need to know that stuff. And so if you think what I'm saying makes sense and I'm showing up here every single week, showing you this stuff, there's probably something to it. You can trade whichever strategy you want. I'm just sharing what works for me. So that was pound dollar. Pound Swiss, this was a lovely one. So this was this. Again, price just pinned the level. Where is it? Here. Look at that. It's actually a 4-hour level, not a 1-hour level. I've lost myself. There it is. 4-hour level. Why did I take that? Well, there was a real nice interaction here. That's where price kind of moved off of in a big way. Also moved off of here, but we were already beyond that. When price was moving up, we'd already reacted here. If you see that, boom, nice reaction, 37 pips on pound Swiss, beautiful. So here, that was my reason for entering. 4-hour candle body close. Why did I take my profits here on pound Swiss? Well, we had the wick over here, and so that was it. It was a very slow move out, and yeah, I was just quick in, quick out. This was the same day as the pound dollar trade, same morning, I believe it was the morning. Yep, 10:15 my time. Yeah, decent trade, and very little drawdown. I usually see on the Swiss pairs. So as you can see there, absolutely zero drawdown and just straight into profit, which was nice. That was the pound Swiss trade. Pound yen short. So I made up for my pound yen loss here, right? Pound yen short 191.48. So it took a whole dollar, or to move. Yeah, that was the one that failed, and this is the one that worked. Bit of drawdown on this one though. So why did I get into this? It was this level here. I think we can all agree that strong move down, and then we pushed back up, and that's where the candle body closed on the 4-hour chart. I don't just take 4-hour candle body closes, by the way. Like I will take daily candle body closes, but it has to be a daily level. And I will also take weekly candle body closes, but it has to be a weekly level. It's just the 4-hour intraday key levels, as I would identify this one as, just work incredibly well. And so if you're not greedy over where you're taking your profits, you can just trade these all day long. Like for day trading, 4-hour intraday key levels, like brilliant. So again, you can see from most of my trades this week, I'm taking like 20, 30, 40, 20, 30, 40 kind of pips off these trades. The drawdown, like this is the biggest drawdown I've had all week. This was a drawdown of 52 pips, right? But I was anticipating it. Why? Because we got this wick over here, right? I have to consider that. And we didn't quite tap into it, but we got pretty close. So in terms of risk management, I'm expecting, well, I'm not expecting to go into drawdown, because you'd ask, well, if every time you expect to go into drawdown, James, why not just change your entry to something higher up? And the reason I didn't change my entry to something higher up is because it's a yen pair, and I just haven't revised my strategy to do that yet. It would require more thinking than I want to put into this right now, because I'm separating my planning from my execution. And so right now, I'll just execute on the 4-hour candle body, and sometimes it will draw down more than others. Sometimes it will just go straight into profit. Yeah, it's just one of those things. But I'm still going to hold the trade, because I know that the first area of potential struggle is going to get hit, which it did right here. So what do we see? The level before we pushed into the where price was before we pushed into the level. We moved back, and that's where I decided to take my profits, and then we moved off it. So it was a good area to take them, because once again, like just because you've seen pound yen go further than the first area of potential struggle many times, I'm not going to adapt my strategy, because the minute you start to do that, that's when the market will be a bastard, and it will go against you. And then you'll feel stupid when you review your trades. You'll be like, yep, James said I should take my profits at the first area of potential struggle, but you know, I thought I'd be fancy and try and run things, and you got screwed by the market, because you thought something when you were supposed to be executing and not thinking. I need some water, just a moment. All right. Last trade, Swiss yen. Same thing, exactly the same thing. I told you I'd had a Swiss yenny. This one was far more beautiful. I'm trying to remember why I got involved in this one. Was it the 1 hour or the 4 hour? It was actually here, the level, I think. Maybe it was the 4 hour. No, it would have been that. So that's what I refined it to. Looks like I went in. That can't be that. I know what I've done. Basically this here. So that was my shelf that I was looking at. That price action. That's why that was my level. That's why my entry was here. And as you can see with this, bit of drawdown, 27, 28 pips on that. And then first area of potential struggle. I don't even need to drop down the time frames to tell you why this one was here. We've got the wick to the left, and there you go. So that is the reason for that. So I've got through all of my trades. Hopefully I didn't go through them too quickly that I wasn't able to explain them all. But again, the same thing I do week in, week out. There'll be other videos where I've explained this more. Again, if you want to go into detail on why I do what I do, school.com/leveledfx. The link is in the description below. If you cannot spell leveled or FX, how do you spell FX? FX, yeah. So it's leveled FX. This is the group that you come to. Here's the post I told you about. If you want to look at all my trades that I took this week, I actually posted the screenshots of them in here, which is something I don't usually do. Once again, I just don't think that, well, first of all, I don't think you should focus on my trading too much. What I do in here is more about the people that are in here and helping them develop. So whatever questions I get and where things are unclear, that's where I want to focus my time, not on what I've done and how brilliant I am. You're not going to learn too much from that. But if you do think that there are some lessons in me sharing more of like my sizing and that everything posted in there, by the way, was on a $100,000 funded account. I like the $100,000 ones. I don't know what it is, but it's just, I make far less mistakes in terms of setting up the trades when it's $100,000 and not $200,000. I just like it. So if it ain't broke, don't try fix it. So I keep with the $100,000 accounts, and then I copy trade onto the others. That's how I do it. That's how I'm going to continue to do it, because it works. And maybe it's from a past scar of taking a $200,000 challenge when I was trying to gamble my way into being funded, and I would lose them. And, you know, those were the pricey ones. They're about $1,000 to take the test or take the challenge. And so, yeah, I just stick with the $100,000 ones now. And that's it. But yeah, that's all the trades. We can have a quick look at the economic calendar ahead. The reason I look at the economic calendar isn't because I'm a news guru or fundamental trader. I'm definitely not either of those things. But I look at it because it tells me stuff about how the market's going to behave in the upcoming week. And I think that as a trader, you should know that, because if you know that, you can adapt to the market conditions. So what I was saying about 4-hour candle body closes and intraday key levels, these levels will work. Why is this not loading? These levels will work phenomenally well. Right, this is really annoying. On particularly subdued trading days. So, I mean, it's Sunday tonight. We've got a bit of New Zealand, Aussie dollar news, but I only look at the high impact news, right? So this week I'm looking to Monday and I can see, okay, we've got HCOB composite PMI for the euro. That might get things moving. Time zone here is GMT. All right, so this is 1 hour behind London still. So around 8:30, 8:15, 8:30 London time. We've also got PMI on the pound. So that could be something that gets the pound moving. So I'm looking at Monday, and prior Mondays had been almost no data at all. So I can expect my intraday key levels to work incredibly well during those days. They might still work reasonably well in the morning of tomorrow, being Monday, because a lot of this pound news will be out of the way at the beginning of the London session. So then we've got a big gap, well, a few hours until PMI, global manufacturing on the dollar, and global services PMI as well. That can get the market to do something. So after New York gets underway, it's kind of free reign. But then leading into the next day, we've got the interest rate decision overnight on the Aussie dollar. So you definitely don't want to be getting into, unless you know the Aussie dollar incredibly well, you don't want to be getting into any like Aussie dollar pairs and then going to sleep with that. So know that if you're going to take an Aussie dollar setup on the Monday, it better be a really, really good one, one that you really, really like, and one that you definitely don't want to miss, because if you do, you might get smashed by the interest rate decision. So just be aware of that. And then the rest of Tuesday, we've got almost nothing other than a Bank of Canada speech towards the end of the day. So Tuesday is going to be a very subdued day. That to me, I mean, I can already smell the levels from Tuesday. Like, it's going to be a good day, I think. Wednesday, we've got Aussie dollar monthly CPI. So once again, that's happening overnight. So if you are looking at taking an Aussie pair on Tuesday, be aware of that, because you don't want to get smashed whilst you've got your eyes closed. If you are open, if your eyes are open at that time of the day, or you live in that part of the world, then by all means. Levels, they'll work. Wednesday, also incredibly subdued. So other than the Aussie dollar, we're going to have a very slow Tuesday, Wednesday, and then Thursday things will get moving again. So Thursday we've got some Swiss interest rate decision. So remember what I said before, all currency pairs, like the thing that moves the currency market is interest rate decisions. So that's a biggie. So we'll see what happens with Swiss pairs. One of the things I'll be doing at that point is on the Wednesday evening, I'll be looking to see where the Swiss franc is placed across the board. So I'll look at pound Swiss, euro Swiss, Aussie Swiss, dollar Swiss. Should have started with dollar Swiss being the daddy because it's the dollar pair. And I'll just see if it's positioned conveniently near any nice levels. And if it is, then I'll probably go ahead and set pending orders on those levels, whether that's long or short, depending on the positioning, and then let things play out, just to give you some insight on how I would handle that. Then we've got durable goods, so with GDP annualized on the dollar later on Thursday. Moving into, we've got a report coming out on the pound. I doubt we'll have anything majorly impactful off that, but you never know, just be aware of it. And then we've got a speech by the Fed, so that could be something. So yeah, just got to be aware of these things, but we don't know what's going to happen from that. So just for me, how I look at that, because I don't want to give you guys just bullshit stuff you can't use. Price could go up and it could also go down. You know, thanks for coming. So how I look at this is price will be volatile at that time. And so that's all you need to be aware of. Then we've got Tokyo CPI during the night of Thursday. So that's going into Friday. So we might have had some nice moves on yen pairs waking up on Friday morning. I know there'll be plenty of people in the community ready to jump on some yen moves. So that will happen late on Thursday, but potentially stuff will happen on Friday. What I mean is price might get close to a level because of the move on CPI. We also have the interest rate decision from yen last week. So yeah, yen pairs have been quite volatile, but they usually are anyway. Friday, nothing all morning. And then we've got core personal consumption expenses on the dollar, both month on month, year on year, and that's it. So Friday should be pretty subdued as well. So Monday, we've got euro and pound, but early in the day. So then the market's pretty much free reign. We've got PMI in the afternoons, be aware of that. And then we've got a very subdued market Tuesday, Wednesday. Thursday, things get moving again. And then Friday, we've got a very calm day. So let's say two very calm days, one potentially calm day, and two volatile days. So anyway, knowing the conditions on the day, just look each day, remind yourself what's coming up, and trade accordingly. So anyway, guys, I'll read some of your questions because I saw a lot of stuff going on. So what have we got here? Is there anything, is there anything valuable in here? Are there any good questions, or is it just you guys chatting with each other? Usually says his account is his stop loss. That's usually coming off the back of a good week. So all new traders need to understand the things reset to zero each day. You're only as good as your last trade. Michal says, problem I faced with small account 1,000 that I always try to stick to the funded account challenge rules, max 5% loss. And when I lost more, I went furious about it because I would be losing the challenge. Yep, that makes sense. So this is related to risk management on your account. If you're trading your account and you're treating it like a challenge and it's only €1,000 or $1,000 account, then sure, you would treat that as you would treat the challenge because that's what you're attempting to do. But if you're going to do that, you might as well just take the challenge if you've got the trade history to back it up. But the problem is that there is not enough capital and very easy to over risk as you have minimal lot size. I assume you mean the €1,000. Yeah. Guys, if you're starting out and you don't have the confidence that you see me have here in the levels and how I'm trading, then 0.01 lots, micro lots, are your friend. You're not going to become a profitable trader. You're not going to be coming into trading and buying a Lamborghini by month 2. Like, that's just not how it works. So there's no point losing money whilst you're learning. You should be building data and tracking what happens and building your confidence, because that's going to do wonders for your psychology. And with that, you'll be able to, let's do this, I'll put it on the screen. Yeah, with that, you'll be able to get ahead much, much quicker, because like, I think it just, if most traders came to trading and started tracking what they were doing and journaling from day one, you would see massive results, like very, very quickly. But obviously that's not what people do, because that's not the given path. It's watch a YouTube video, strategy hop, and yeah, things just move very slowly. You take losses, your psychology takes a hit. You go into the valley of despair, and then you realize that it's the strategy, or you think it's the strategy. So then you strategy hop, repeat the process again, and just go through this multiple times. Meanwhile, you're losing money whilst you're doing it. And so you're just compounding the negative effect that trading has had on your psychology. And therefore, every time you come to the market in the future, you're going to have to unlearn being fearful, because it's like touching fire, you know, like how many times you need to touch the flame to realize it's hot. And you've just taught yourself the wrong thing, which is that trading is dangerous. Trading loses me money. I'm not good at trading. But yet you still come back to it and keep trying until you quit, and that day will come. And then you just lost a bunch of money and you never knew how close you could actually get. Join Leveled FX if you want to get closer, because, you know, I'm joking, but honestly, I really do believe that if people join Leveled FX and do everything that I tell them to do, and that's not because I'm brilliant and I know everything, but it's because I went through the process. I was unprofitable. It was difficult. I struggled to the point where I didn't enjoy trading. And then I overcame all of those things. And the things that I did to overcome those things, I have not forgotten. And so those are the things I share in Leveled FX. So if you want to get that help, and you want to just stop going around this circus route of strategy to strategy, instrument to instrument. I'm trading forex this week. Now I'm trading crypto. Now I'm trading stocks. Now I'm trading indices. Like, it's not any of those things. The problem is you. And so if you want it to stop, I encourage you to join Leveled FX. It's on the school platform. It's cool. There's leaderboards and shit. Like, it's just a fun place to learn. And we've got a really good group of people on there. So go ahead and do that. The link's in the description. Eugene said he followed his journal. That's right. He's done a post in the group this week about that. He's done phenomenally well. Rebel's saying he trades SMC concepts and he's grown his account. That's great. No drawdown means straight to stop loss, right? Well, if your stop loss is break even, but my God, stop moving your stop losses to break even. Yeah, so you guys have basically just been chatting in here. Oh, we've got one from Nguyen. He says, how did you get out of manage the pound yen trade or any other trade after you realized the trade was invalidated? Did you wait for price to reach the level above and pull back from there? On this occasion, Nguyen, which isn't the best example, to be fair, usually I would have some kind of backup level in play. But what I'll do, where's my bloody screen gone again? Yeah, so I'm back over here. So this was the level that failed. I wasn't going to be taking, because, put it this way, I don't want to go into it in too much detail, but how I trade my personal account and how I trade my funded accounts is a little bit different. You would have seen me talking about backup levels and taking a second entry on a position that was going against me, right? I would typically do that on currency pairs that are less volatile. Pound yen could well be coming back here, but because I'm not, at this point, I'm not trading it's a strong level for what I'm trying to do, but the strongest level is up here, right? you can see that clearly on the chart, that if price was to get there, that is clearly, even though I'm on the 4-hour chart, I can see that that's a daily level up there. So if that level got breached, then I would probably look to take a backup level, maybe up here, because then I've got something that's actually strong. But because price on this occasion is moving up, and I expect it to continue moving up because of the price action we see, I know that I'm only getting involved in this trade for a short period of time before price continues on up. That's at least what I'm thinking at this time. So that's why I'm not looking to hold running positions until we get to a level that's far more significant, and then it's likely to come down and provide a bigger pullback, because we're not then looking at this move in to the level. We're looking at the whole move, because we're zoomed out and now on the daily chart, right? So that would be the move in. So I would expect a pullback more like this. That would be like a first area of potential struggle. Do you get what I mean? So that would be like 319 pips on pound yen. If you wanted to. Like, I would treat that as my running position, but that's why it's different, because of where we're priced on the chart. So going back to your question, how did I get out of it? I didn't. I just took the loss because it was one that I was doing on my funded account. I didn't take this trade on my personal because, as I said, this was part of a thing we were doing in the paid group where I was encouraging everybody in there to build their confidence by taking every level. This didn't really fit the plan of every level because I should have just invalidated it after the price moved off it 10 pips before my entry. Like, it just didn't get to where I wanted it. It moved off of this bit just before. So my level was wrong. My entry was wrong. That's why I didn't get involved in that pullback. It should have been a profitable trade. And that's why you see me with a very high hit rate usually. And on this occasion, taking a loss was just something I decided to do instead, because it wasn't something I was looking at kind of like just trying to sell down and keep trying to sell it. Like, I know that price was going up. It was just a quick pullback, but I was wrong. So that's why. It's not so easy to navigate these comments. But it was a good question. Thank you for your question. What else we got? Cool. All right. So that's pretty much everything, which is good because I'm already running over by 20 minutes. Jesus. Okay, guys. So I'm going to go ahead and wrap up the video there. Thank you again for tuning in. How do I get rid of that now? All right. The comment stays. Thanks again for tuning in, guys. Really appreciate the support, encouragement. I hope what I'm doing here is valuable. And yeah, keep tuning in. If you haven't done already, go ahead, join Leveled FX. Why wouldn't you? Unless you thought I was a complete moron, not knowing what I'm talking about. But if you are struggling, seriously, if you are struggling with your trading and you feel like you've tried lots of things and it hasn't worked for you, go check out Leveled FX, doing something a bit special there. And I'm sure you'll enjoy it. Anyway, thanks, guys. See you next week.